We just got some inflation data this morning, and I wanted to take a look at TLT stock. Now, I had been trading TLT stock going into Friday's non-farm payrolls number, took a quick profit, then did not front run today's TLT stock movement from inflation data. Inflation data came in a little stickier than the market wants. US 10-year Treasury yields and the 20 and 30, of course, are moving higher. Probably not going to go too much higher, but expectations of future rate declines are decreasing somewhat. Stock market, of course, is just moving upward, and they're just basically ignoring what information is out there, which is fine for now. But I wanted to trade TLT stock, and I'm looking to front run the PPI on, I believe, Thursday. Producer price index should come in equally sticky, and that could really jar TLT stock. Let me show you what I'm looking at going into Thursday's number. Here's a look at CPI headline inflation number. Moved up a little bit month over month. Of course, the headline rate isn't getting where the say the Federal Reserve would want it to, but the headline rate includes food and energy. And we did see a drop in the price of oil over the past couple of days, a couple bucks actually per barrel. Relatively speaking, that will have an effect on the headline, but what I want to focus on is the core rate, which would be what the Federal Reserve is looking at. Now, first, CPI, Consumer Price Index. The Federal Reserve doesn't necessarily focus on this. They look at the PCE. The PCE is a little more fine-tuned, but not much. And given that, the CPI and the PPI, or the CPI and the PCE, they go fairly hand in hand. If I put the charts over top of each other, they're mirrors of each other. So this gives us a good idea as to what the Federal Reserve will be looking at when it comes in last week of the month. The way I do my analysis, I start with personal incomes, and I ask the question, is the rate of growth, the annualized rate of growth of personal incomes, increasing or decreasing? Because that will transition into the annual rate of personal expenditures. Now, personal expenditures has been increasing, and because of that, we'll probably see core inflation rates sort of remain lofty or sticky, as I'm seeing headlines coming in today. But the big thing with inflation, the core rate, two things actually. First, housing. Housing really drove 70%, over 70% of the inflation spike that we saw. So you really want to pay attention to housing. It's something we got some data coming in next week, and I want to start really kind of focusing on that because we're starting to see housing prices moving back upward, which would affect core inflation. At the same time, the other variable is the big spike up was basically corporate profits. They just said, let's run with it. Just keep pushing prices higher. Blame it on something else. Okay. In the meantime, the fact that the Federal Reserve is targeting a 2% rate. Now keep in mind, we're at 3.7% unemployment rate. We just got non-farm payrolls on Friday, and we continue to see modest gains in employment. But we're not going to see big, huge gains in employment because we're at what would be considered full employment. We're definitely not seeing declines in employment numbers. Non-farm payrolls, despite the fact that it was revised down for the previous 2 months, is continually moving higher. This economy continues to add jobs. Those new jobs turn into personal incomes. The rate of growth of personal incomes increases, so does expenditures. This keeps inflation higher. We're not going to hit the 2% rate this year. In the meantime, stock futures ignore higher than expected U.S. inflation report. That never works out. Never fight the Fed, ever. In the meantime, there's a couple other things. I did kind of break this down. There were some ETF movers. The TLT stock, which is what I'm talking about here, I did not, as I said in the intro there, I did not front run this particular number. I did front run last Friday's non-farm payrolls. And I felt that, and I made a quick profit, but it wasn't much, just a couple pennies. I'll take it though. And I also did UVXY stock. So TLT stock, I see continually moving lower. That I think that the most recent high, relatively speaking, is in, and from this point, like 68, 67, 66 for TLT stock, I don't see that printing again for some time because long dated yields, the 10, 20, and 30, the TLT trades off 20 and 30, are moving back upward. And that's really what I'm kind of taking a look at. At this point, we're starting to see other things affect gold, GLD stock. GLD, of course, is the ETF for gold trust, one of the bigger ones there. We're seeing gold off. We're seeing bonds kind of, or oil prices kind of slide. But what I wanted to look at here is the US 10-year Treasury yield. And as you can see, the 405 that we saw just last week, I think that's done. I don't necessarily see us breaching 4.25%. So I think we're probably going to be stuck in a range. And in an environment like that, I do pretty well because expectations are that people were going to see bigger moves. Here's TLT stock. Like I said, I didn't see 98 printing when I went in against Friday's number. I sold 98 calls and I bought, I think it was 92 puts. I was 3 cents out. And I did what's called as risk reversal. As the calls deteriorated in value, the puts gained some value, and I made the spread on that between the two. I did not front run this. My expectations are that on Thursday we get PPI. PPI number should, just like it did last month, surprise to the upside. So bond yields are likely to remain elevated. What I'll probably do getting in tomorrow, if we can breach the 95 level, I'll probably sell some 97 calls against TLT stock with the expectation that if I do this, let's say on a 10-day or 17-day basis, out a couple weeks, I can get some time erosion, theta, that we simply won't see 97 or 98, that those options are just going to expire worthless. Easy money. I do expect we will see some kind of movement lower in TLT stock as bond yields elevate somewhat on Thursday off of the PPI number. But my analysis continues to be the same. It continues to be consistent, and that's something that you have to do. We have full employment. That's generating incomes from so many people being on the payrolls. So I don't expect big gains in employment, and I don't expect big gains in personal incomes. But at the same time, you're seeing a lot of gains in personal incomes relative to, say, inflation numbers as individuals keep trying to scale up a little bit to kind of get ahead of pricing. That converts into expenditures. Those expenditures are going to continue to drive this economy. The stock market, broadly speaking, does have a lot of rationale to be higher because this is a roaring economy effectively with unemployment at 3.7%. That will keep bond yields higher. Federal Reserve has no reason to be lowering interest rates in this environment. It will create inflation. Most likely, housing. So that's kind of my thesis, and I've been very consistent over many months about this, pushing a year actually probably, on this thesis that I do not see the Federal Reserve lowering interest rates anytime soon. Because of that, selling TLT calls for me seems like an easy bet. Make sure to follow along on Thursday. I'll kind of look at PPI and see how that kind of moved the markets, but breakdowns like this, if this is what you're looking for, hit that like and follow button. Thanks so much for the comments. See you in the next video.